All right. Here we are once again. Good morning, good morning, good morning. Glad to have you guys. We're going to start watching the markets this morning. It is a good day to trade the markets. So let's get rocking and rolling. This is the S&P 500. I've been having a little struggle this month. I haven't done too well. Had 3 losing days in a row here in the morning session with us. I've actually, believe it or not, done quite well after the hours, after we closed down here. And I just traded a little bit in the afternoons, but haven't been able to make anything happen here first thing in the morning with you guys. But we're going to see if we can't put ourselves in a little trader timeout here and just try and get green today. Work on a little bit of discipline. Look at this market go. This thing is crazy. If we pull up the news here, we have initial jobless claims. That's the only thing that came up today. And it was at 6:30 this morning, so an hour ago. And that's 6:30 my time, UTC 7. I'm in Mountain Time. So you can see in here we got previous was 219. Consensus was 222. The forecast was 225. And it came in at 220. So higher than the previous. So jobless claims went up, but lower than they thought. So more than last time, but less than they thought they were going to be. So that ended up being bullish, I guess. Again, I always tell you, it's not for us to decide whether the market's going to be bullish or bearish based on the news. It's for the big market players to decide. And they decided that that was bearish or bullish news. And this market started to rip higher in the pre-market session. So this is pre-market. And of course, we're in the futures market, so there's really no pre-market. This is pre-market on the stock market that's moving these markets right now. So these markets trade 23 hours a day. This is just the S&P. We're looking at the 2-minute chart in the upper left-hand corner, the S&P 1-minute chart in the upper right-hand corner, bottom right corner, bottom lower corner, 15-minute chart, bottom left corner. That's the daily chart. You can see, which kind of makes sense. We've been struggling a little bit. I've been struggling a little bit. This market's not really been trending and having any follow through for the last couple of weeks here. It's just been going sideways. So every time we get into a trade and anticipate a nice big continuation of the uptrend, it's just not happened. It's got this first leg and then it just died, or else the market just died yesterday. I was anticipating we had a big rally just like this, exactly like this yesterday. The market came up in the pre-market, and then as soon as the market opened, it flushed, and I was trying to take a long position in anticipation of a rally for the next rally up, and it didn't. It just came down and just died and went like that. And so I got in right here trying to go long and got my hiney handed to me. So let's hope that the market doesn't do that again today. If it does, let's try and just capture the reversal and see if it wants to drop down. So we're going to wait and see what happens here on the opening bell. But the bell's coming in here in, what have we got? 30 seconds. So if we want to, I'm going to go out on the limb. I have people tell me, because I sit on my hands a lot for the first 20 minutes, 15, 20 minutes, don't make any trades. And people are like, why don't you trade right on the first of the bell? I'm like, because I always lose money. So that's why. So let's give it a shot today. We're going to go in small, and we're just going to trail on the ATR. Yeah, I'll just do it with this one here. Drop it in there. Oh, let's see. That's not going to let me do that. There we go. So if it drops right out of the bell, right out of the gate, just like it did last time, we'll watch this market flush and see if we can't get in and take a short position. I'm doing it on the 2-minute chart, not on the 1-minute chart. The 2-minute chart always a little bit smoother than the 1-minute chart. The 1-minute chart takes a smaller risk. Okay, so we're in short with a single contract to the downside on this opening bell. See if the market won't just flush for us here. And put my stop at the high, just above the high, just in case this thing turns and rips higher with a clearing bar. Otherwise, we'll just take a short position, anticipate this market comes back down just like it did yesterday. So we're going to play this reversal off the opening bell. See if we get stopped out just with a single contract. And yesterday, that thing just flushed right down. We'll see if it's going to do the same thing today. But just because land decided to do it this way, that's, Murphy's Law. Probably go up and stop me out. But we'll see. Just let it ride for a second. But you can see the daily chart. The market's just been dead for the last 2 weeks. Hasn't done anything. No trending. Oh, look at that. It's going to go up and stop us out. Break a new high. Probably clear the bars. We'll probably do a clearing, clear everybody out, and then flush. There's a clearing bar. Yep, there's our clear. We just got stopped out with a loss. Didn't do what it did yesterday. Didn't repeat. We thought yesterday would just repeat what we did yesterday and just get a flush right out of the bottom. And it's going to continue to rise. All right. We will watch it continue to rise. We're watching the, on the 2-minute chart, I've got the CMF, and you can see it's way up there in the overbought region, way up there. The MACD's already on the back side of this trade. Well, that's on the daily chart. Well, let's turn the MACD on over here. Turn the CMF off. So it started to rally. It's still on the green front side. This is the 15-minute chart down here. This is one we'll trade some options on if we can get some. You see the historic volatility. The volatility is way high right now. I'm still going to be bearish on this market and think we're going to get a flush. I think it just has to go up and clear out the high bars first, and then turn and flush. So if that's the case, we'll try this on the 1-minute chart again. Trying to catch a reversal, which is a very dangerous thing. Always trying to catch reversals are dangerous things. The trend is your friend until it bends or ends. So you want to that's called momentum trading, and we like to catch the momentum. It's fun to try and catch the very first reversal, but those of you who have been here for a while know that I like to wait for the market to make like 4 bars in the direction that I want the market to go, and then get a little pullback or a little hesitation, and then that's where I generally like to go in. I don't generally like to go in even on the arrows. You get an arrow, I like to see the market move in my favor, a little bit of a pullback, and then the first candle to break a new high or first candle to break a new low. That's where I like to get in. There we go. We're starting to make a little headway here. Maybe not. We'll just put a stop in here, stop in here. Just let this market go. See what it wants to do. Give it a little time. Be a little patient, land. That was our first red candle to make a new low right there. So we took that one, got stopped out right there. This is the next red candle to make a new low. And now it's going to come up and looks like it's going to stop us out too. Watch it just continue and grind higher, and we'll just sit here and keep trying to capture the reversal. So I guess I'm here to show you all the mistakes. Don't do what land does. Of course, yesterday this would have been a good strategy. Yesterday the market came out and just flushed like a rock. Just boom, dropped right out the bottom and just kept right on going all the way down to the very bottom. It went 100%. It went all the way down. It came all the way down like this. It went sideways for a minute, and then it went all the way back down like that. So that's what it did yesterday with this exact same pattern. So let's see if we can't capture that reversal and see if it's not going to do it again today. Now, usually I just capture my losses, recover my losses right here. So at $150, I'd take it off and recover. I'm going to be a little bit more aggressive today. I'm not going to play my recovery on 150. I'm going to see if it won't fall farther. I want to see if we can't get a nice downtrend and see if we can't do some fun trading, do some pillaring and pyramiding. I keep talking about it, but we never get an opportunity to do it. Market never does follow through and just give me a nice trend that I can pillar and pyramid into and show you guys how that works. Just look at that. We just got stopped at again. Okay. I had the opportunity to take me to recover, and I didn't do it. I was like, okay, well, don't recover this time. You're gonna okay. Frustrating. Let's wait and see. What can we do with some options? Yesterday, I had a really good day, actually, afterwards, almost $2,000. But I did it all with options. I did it all with options. So let's come in here and sell some calls. Okay, going to put on a because I am bearish on this market. I do think it's going to fall. So let's go ahead and get into that market and see if we can just give ourselves a little buffer. This is the same thing. We're just taking a short position, but this time we're doing it with a little buffer. So the market just needs to fall before that red line. If it goes up to that red line, then we'll be in trouble. We'll have to roll it out. Come on. Oof. Not going to do today what it did yesterday, which is just flush right out of the bottom of that thing. Doesn't want to drop. Well, we did have class last night. We actually had a very good class. Lots of great questions. But we had a couple people didn't show up, and it was a small class anyway. So when you have a couple people who don't show up to class, makes for a small class fee seem real tiny. But we did have a good lesson. Is Camille here today? She was in class last night. Camille, are you out there? Let's go say hi to some people while we will let this thing dance around here for a minute, see what it's going to do. I haven't put in a limit order on here yet. I just want to see how far this thing's going to drop. So we'll watch. Let's go say hi to some people. Let's come in here. David Lund, John David Lund. Good morning. Glad to have you. Larry McIntosh, I missed you in class last night. So hopefully there's everything's okay. You're doing all right. Not like you to miss a class. So I hope things are all right. We got Gary Thomas. Great to see you, Gary. Nice to have you in class. We got Rock Steiner. Good to see you, Rock Steiner. Gee whiz. And we've got Matt Baker, Morning Land and all. Matt, how you doing? Look at this market. What do you think of this thing? It's just dead. I thought we were going to get a flush out of the bottom of this thing like yesterday, and didn't happen. I'm just watching the S&P, though. I'm not watching the rest of markets. Try to stay focused on one market. I thought we were going to get a flush. There's Selena. How you doing, Selena? It's good to have you. John David Lumberg. Land since CMF bars were increased distribution in 2 minutes before opening. Wouldn't that be a big sign? The sign market would open up since the CMF bars were increasing distribution 2 minutes before opening. Would that be a sign the market would open up? Well, maybe you're right. Which chart were you looking at, John? Were you looking at the 1-minute chart, the 2-minute chart? I was watching the MACD for this to see if we couldn't get a roll over the top, and it looks like it's rolling at the top right here. You can see in here that this thing is turned green. The thing the thing that happened is it took off at 6:30 this morning on that news. And if you remember yesterday, it did that exact same thing. We had that huge rally right before the bell, and as soon as the bell rang, that thing flushed right straight down. I mean, it came down, went sideways, and that's where I tried to go long and ended up taking a loss yesterday. And instead, it flushed down again. I went all the way down to 100%. So with this big run like this, I thought we were going to get the same pattern. I thought we'd get another flush out the bottom and drop, but this one's just holding up there. So it's really hard to use the indicators to try and tell you what the market's going to do on the open, because the open is such a frustrating time. It's such a frustrating point. First of all, we're in the Christmas season, and we talked about this before, where a lot of guys don't trade. I mean, we've lost a lot of volume in the Christmas season simply because guys don't want to trade in the Christmas season. They're the big boys back east in New York and Chicago, they work on a commission basis, and if they meet their commission, then they don't want to trade and have the chance of losing their commission before Christmas. So they stop trading. So the only ones that are left trading are the ones who didn't reach their commission, and they're trying to reach their commission before the end of the year. And so that's why you get a lot of quiet market in December. And then on the morning bell, most of the stuff that happens the first 10, 15 minutes isn't really a trend at all. It's just opening bell, filling orders from the midnight session. So a lot of guys come home from work, right? And the markets are closed, but they pull out their little iPhones and they start buying and selling stock. And of course, all those trades don't take place until the opening bell, and they have to match all those up. And that's why the markets flip and jump all over the place. And the indicators really have no bearing on what those things are going to do. So you have to kind of wait. And that's why I generally wait and don't trade that opening bell. I'll wait 10, 15, sometimes 30 minutes for the opening bell to clear out and get all that noise done, and then start to try and capture a trend. I'm a trend trader. I'm not much of a scalper. I have the strategy scalp and trail, and I get kind of forced into scalping because there's so many scalpers in these markets. So if a market breaks in a setup and it starts to rally, a lot of scalpers catch those, and then they're happy with $100. So they jump out, and you get a big group of those, and that flushes the market right back down. So oftentimes that flush will come back down far enough that it'll stop you out if you don't scalp along with them. That's where I come up with the scalp and trail strategy, and that's why I do that. So you get in with 2 contracts on these strong breaks, on these momentum moves. You have to scalp with the rest of everybody else so that you can cover your costs in case the market flushes back too far, stops you out, and then takes off and runs. So you have to scalp one out just to cover your costs in case you get stopped out, and then you don't take a loss. You just have a scratch trade. But if they don't scalp the scalpers don't jump in and take too much of a scalp, then the market can continue to run, and you're good. You scalp one out and let the next one trail. But that's you kind of get forced into doing that a little bit because of the rotten scalpers. But I'm a momentum trader. I want to see a trend go. I want to just jump on the train usually. That's what I like to do. I wait for the train to begin to move, start to roll down the tracks. And once it started to roll down the tracks, that's where I look for an opportunity to jump on the train. I try not to take reversals, try not to hunt for reversals. Reversals are generally the worst thing that you can do for yourself, is to try to catch the reversals. Because the reversals, there's so many false reversals, so many fake outs, so many fake reversals. I call them the A1s, right? Because they're the A1 of the market. So here's another A1 right now. It's starting to drop, starting to fall. It's breaking that green light to the downside. So that would be a reversal to the downside. That's what we've been looking for. We want it to go through. If you take that, but look how many fake ones there were. There was a false one, and it followed through far enough. There's a false one. There's a false one. Is this going to be a false one? Is it going to follow through, or is it going to turn and reverse and start to go back up? But see all the fake drops. And if you keep trying to catch every single one of those, you're going to end up getting your hiney handed to you, right? So I like to wait till the train actually moves. And this week I've not done that because I feel kind of pressure sometimes from from being here and, performing like a trained monkey to come in and trade in front of everybody and try and make money. So I don't want to sit on my hands for the first 15, 20, 30 minutes because that's no fun. Nobody wants to come and watch somebody sit on their hands for 15 minutes, although that's what you should do. That's why I come and do these things first thing in the morning, and we do them in a demo account because I don't usually, for me, I don't trade the very morning session. So that's why it works out great for me to come in here and do this with you guys and teach and practice and run and try to trade in the morning session, because the morning session is really hard to trade. These morning breakouts are tough. Now, if you can catch one and they run, yeah, you make a lot of money really fast. And that's what's fun about it. That's what's nice, but it is a tough time to be trading. Like, this is my favorite strategy right here that we're doing now. And I've gotten pretty good at it, but it's hard to do in the morning session. It's a lot easier to do in the afternoon when the markets are more predictable. You haven't got all the scalpers jumping in and out of the market. And you can just kind of put your position on, and the market kind of rolls through these little rolling snaky patterns. And you look at the afternoon session. The afternoon session, oftentimes, especially when there's no news, and we got the news in here. See the news? So initial jobless claims, that's the only news all day. So today's going to be a fantastic day this afternoon, kind of looking forward to it, where this market's just going to kind of roll through little snaky patterns all day today. It's not going to have anything that's going to push it higher or anything that's going to push it lower. And so it's going to be nice to be able to just come in here and sell premium against it and just collect premium on these options. And it gives you a little buffer in there. And, you don't have to be perfect and you don't have to catch the A1 every time. When you're trading with contracts, you have to be pretty damn good. You have to be pretty damn perfect. It's hard to take all these little fake breaks right here. You want to take them because it's the first break, right? So this one's working out for us right now with the arrow dropping. And so if you can be patient, take the arrow. But sometimes the arrow, by the time the arrow comes, the arrow doesn't come until the close of the bar. So it flushes way down here. And then the arrow gets you in way down here. So you have to be careful with that too. But this was a good arrow, that one there. This one was a good arrow too for the upside, but that happened at 7:00 this morning. So you can see the little green dots followed all the way up, and you didn't get stopped out until right here. So that would have been a nice move from this little arrow. You get in here and get out right there. That was $200. So we're finally in right here. We get in right here, and this thing's flushing down $175 on a contract. But, there was no arrow for me up here when I was jumping in on the opening bell trying to catch that drop. That didn't come. All right. It didn't come when we expected it to. Yesterday, that's what I was looking for. I was looking for that exact same pattern yesterday. It just dropped like a rock out of the top. I thought we might get the same thing. So this is a little easier for me. Come in here and drop in. You can see we're up $142 right now on this one. If we come in and look at the liquidate, see how far down it's going to go. A little bit more, a little slower. It's not going to, it's not going to make as much money as if we were in a contract. If we were in a contract, we'd be up right now 212. We're only up 142 because the delta on these options, right, is half. So we're at a delta of 0.50. So we're only making half. Of course, we're only losing half as well. So we're only making half of what we would be making if we were in this thing. What did I do? I started to put a stop order on this thing. So let's go put a limit on, take some profits. Limit the multi-leg. So we're at 37% right now. Still falling. If we get up to, let's say if we get up to 50% of our profit, so 40, 50%, that's $210. We'll go ahead and take that off. Oh, and it took it off. So closed out 6, 4, 5. Oh, so we got our full 250. Yeah. I got out prematurely. Got right out. I thought we had more room to go. All right. So we made a little bit back. We're now only down $130. So you're like, well, what do you want to do, Lan? You going to put it on again? I think it's going to come down to the VWAP. And I like it's fallen out like we thought, just didn't come down as quickly as I thought. So now we're coming down, hitting 38.2 on that Fibonacci scale, bouncing off of that. Let's wait and see what happens. Put that back on there. John Mackey. We didn't say hi to everybody. So there's John Mackey. Good morning, Lan, everyone. Michael Bruce. Glad to have you in the house, Michael. Making a little bit of that money back that we lost. So Bruce R., good morning, Lan and all. It's quite good to have you guys. John Davis says, I think it was the 2 minute, the one you had chalk and showing on the bottom. Okay. I'm looking at MACD on here right now. So we're on the back side of the MACD. And we talked about that yesterday, right? So the back side. So we don't want to be going long if that thing's rolled over the back side. Now, it doesn't mean it can't turn and start to rally back up. Obviously, the market can do anything it wants, right? But it's starting to rally here now. So this is a little pullback, but the trend is down. So we're getting a little pullback. Is it going to just flag here and then turn and drop again? Give us a little ABC. ABC. Or is it going to go up and wipe everybody out who held on to their long positions? We got a previous high right here. Chalk and money flows down in the accumulation zone, as John David is pointing out. We do have down here. That's the chalk and money flow in the accumulation zone down in here. And the market is turning and starting to rally. Now, again, catching the reversals is really hard. That's a hard game to play. Wait for it to give us 4 green bars. Stop trying to jump in so soon, Lan. Wait for it to give us a little thing like that. All right, I want to get on a train that's already moving. I don't want to try and get on a brand new train. And that's been my strategy for so long. I've been breaking those rules this week, and it's been kicking me in the behind. So I got to calm down a little bit. So because of that, I'm writing an article in Pit News Magazine. It comes out in January. January issue is going to have an article in there talking about try not to get on a moving train. Don't try and catch the reversals. Reversals are really hard. So this train right now is in the downtrend, right? We're in a downtrend, moving train, moving down. So we're looking for this is the little pullback. If we get a new candle to break a new low, we'd take another short position on the way down. If it makes 4 bars up, nice 3-4 bars up, then comes back down. There's a 2-bar rally to the upside. We'll see if it won't continue down. Just go in with a single, being cautious and careful because we're still in the red. Okay, so we're taking a short in anticipation of a continuation of the downtrend. I want to see it come down and touch this magic blue line right here, this little rubber band. But we don't want to take a big risk. If it doesn't decisively move in my favor, I'll just get back out again. If it starts to rally and go back up, we'll cut it and try again next time. We got to catch a trend. Got to get into something that's moving. There it goes. Come on. We could put on another option strategy in anticipation of a continuation of the downtrend. Even if it went up a little bit, it would be okay. But this one, it's got to move decisively in your favor. No wishy-washy stuff. Wishy-washy stuff is fine with an option, but it's not fine with a contract. Okay, we're going to come in here, add OCO, and 130. Just has to touch that to get our money back, and we'll see if we can't capture some of our money back and get back to green, get back to break even at least. this stop, I'm going to come in here and just tell it to trail one price bar back. Trail price bars one. Protect ourselves in case it does just flush back up. There's the scalpers. Those are the guys that you know what? Those damn scalpers are coming in there. That's what causes that market to drop like that and then turn around and rally right back up. Scalpers are happy with their little 10 points, and then they start that falls. They take those short, and then they're, oh, I'm making $5, and they start to buy to get back out. And it stops us out. Now we're breaking to this side. So this is the first candle to break a new high in the other direction. There's a clearing bar. First flat bottom bar is generally the new direction. So if it's going to make a new direction to the backup side, we'll wait 52 seconds and see. But then watch this bar. This bar will go really long. And you miss it because you're like waiting. Where's my H-vol? Got to watch my H-vol. Historic volatility. Oh, look how high volatility is. It's way up there. So that's good for selling an option right there. We want to sell when that little blue line is all the way to the top. So this follow through to the downside failed. Didn't give us the ABC. And now it's failing to the upside too. So gave us the first candle to break a new high, come back up. That's failing too. It's $140. Breaks a new high. Do we think it's going to go up and break new highs? Or is it just going to dawdle around here? Problem is that we're kind of dead center on it's in a neutral zone on the stochastics indicator. Stochastics, I generally like to have way up in that upper region before I start selling these. Marcus died. Making a little triangle pattern here. So to the upside, a break above this previous high right here would be our buy signal if we were in a momentum market, but we certainly are not. Okay, we'll see if we can't take a short position on this thing again with some options. I still think it's going to go down to the VWAP. Stochastics is dead center. That's not the best place to be putting on an option strategy. You want to have that stochastics way up here in this top region to put on the call side and way down here in the bottom region to put on the short side, put on the put side. Oh, I only put on one. I should have put on three and make more money. What was I doing? We're going to retrade this. Watch, this is a strategy you can do. You come in here and you say, I want to retrade the multi-leg, and I'm going to put on two more. And then we're going to bid for it, knock them down, see if they'll give us a better price. And they did. So now we're in with 3. Now it's got to really drop because now we're 3 long or 3 short. Oh, it's coming back into the wedge. Come on. Okay, we just don't want it to go up. If it goes sideways, that's okay because we're just collecting premium on the death march towards expiration, right? This is a premium collection strategy. But if it goes up, then it's a short premium collection strategy too. The market's got to go down. I still think it's going to go down to the VWAP. Just don't want it to go up. It can go up a little bit. Just don't go all the way back up and break new highs. Or we'll be in trouble. We'll lose some more money. We'll have to roll out. So we set a limit on here. How much do we want to make? So we come in here, liquidate the multi-leg, run this thing down. Net profit over here. How much do we want to make? 25%, 30%. 30% would be, if we could go to 30% would be $120. Might be a little aggressive. Let's go to 25%. What can we get at 20? Let's do $100. If you make $100, give it to us. What are we at now? We're at 750. So let's go ahead and place that order. So now we just wait for it to give us $100. When it gets $100, it'll take it off the table. And remember, it doesn't have to actually drop for us to make money. It just can't go up. It will make money if the market just goes sideways, because we're just collecting premium, but it just makes money faster if it falls. We lose money if it goes up. We just don't want it to go up. So while it's sitting here and dawdling around and going sideways, we can make money on a sideways market with this strategy. It'll just be slow money. Zero days till expiration means this option will expire at the end of the day, and we would get our full. In this case, if it stayed below that, right now it's a yellow line because I turned it yellow, but at the end of the day, if it was still below that yellow line, I would make $655, but I'd have to wait till the end of the day. So I put an order on there to say, well, if it just made $100, then take it off. Don't wait for the full $655. Actually, we wouldn't make $655 because we have to pay for our call option up here. So it would be $655 minus $257. So about what, $400? So you make about $400. And we're trying to take 100 out of it. We're at $22.50 right now. A couple of days ago, I was doing this and I had on 10. And I was doing it with the put side. Oh, no, that wasn't this strategy. I was doing something else. Was it this strategy? Yeah, it was. I was doing the put side because I was expecting the market to rally. Or no, because it was the put side. It wasn't this strategy. But I had 10 options on, and the market flushed. It's going along like this, and then just one bar. You've seen it. Just one bar just went wham like that, just really fast. And it made me $1,000 that fast. Those put options just slam went through the roof. And I had an order on. I had an order on to take it off at like, I think it was like $250. $250 was the order to take it off. And when you have a limit order, it has to give you that price or better. And as soon as it can give you better, it's got to give it to you. And because the market just went like, it just dropped from, just went bam, just like that. And it was $1,000, bam, just like that. They took me off and gave me $1,000 when I was only asking for $250. So a limit order is the price you ask for or better. They can't give you worse. They have to give you the price you ask for or better. And man, they gave me better that time. That's like the first time that's ever happened to me in my life where they gave me that much better. All right, it's coming back against us. Now we're in a drawdown. Now we're down $75. If it goes all the way back up and breaks new highs, we'll just roll this out. We'll have to roll it out. I thought we were going to come down. Look at that. It's holding across that flat bottom ninja right there. Little flat bottom. This is that little wedge pattern where it's coming along, going flat, and that's actually very bullish. So this is not good for our position. That's a bullish pattern. You got the flat bottom and you got the wedge pattern coming in like that. So it held along here, and when it breaks, that's when it breaks and goes. So we want to see that fail. We don't want to see it follow through. We want to see it fail and come back down. So we want to see it be a good football running back, go up, fail, and drop out the bottom. Usually don't want to see those things fail, right? Because that's where you take a long break. Break out there and look for a long position to go long. But we want it to fail because we're short. Okay, there it's failing. Fake break to the top, flush out the bottom. Come on, buddy. Fail spectacularly for us. Drop, drop, drop. I think we got a couple more guys saying hi. Kirk says hello. Steve Scott's asking, what are your settings for the AD and the CMF indicator? How can I trade? How can traders use volatility to your advantage? Using volatility to your advantage is you do that with options. The option's volatility, but you want it to be volatile in your favor. And that's always the game, right? So anytime you're looking for volatility, you want volatility to be in your favor. Volatility is what moves the market. That's what makes the market go up and down. There's no volatility right now. The market's very stable. I mean, it's not doing anything, right? It's just going sideways. So that kind of a market to a trader is death. You don't want to have a stable market. That's the worst thing in the world for a trader. Now, for an investor, that might be okay. And if you're an options premium seller, a little stable market's not going to hurt anything. That's good because you're just going to collect premium over time. But if you don't have volatility, the market doesn't trend. And it's the volatility that causes the market to trend. So this market is starting to show some strength to the upside, which is not good for our position. We want it to fall. So if it goes up and starts to get too close to that yellow line, we'll have to roll out. I don't want to roll because that costs me money. So what are my settings for AD and CMF? The AD is the Williams accumulation and distribution. And those are my settings. I just use the TNT defaults. So you hit TNT defaults, and that's my settings. Except for I change the color so that it corresponds with the bulls and bears. So I make the with a period of 28. So I make that line right there. I make the ADMA. I make that line the red line. So make that one red. And then we make this one green. So I just make it red and green. Actually, I think I do it the other way around. Yeah, we'll leave it like that for now. So just color code it, just so it makes sense to you. Okay, the market's failing that wedge pattern. The reason I like to do the calls and not the puts so much is because markets bail out. They don't bail in. They climb slowly, and then they fall hard. Now, that's not always the case. Look how hard this market rallied out of that news event this morning. Those were pretty good, but see how fast it falls? When it starts to fall, it falls nice and fast. That's where we made our first trade this morning, right? Our first options trade, we made money there. So we got a little bit more staying power when we use options. We don't feel like we have to jump in and out of the market. If it doesn't decisively move in your favor, you can kind of sit through it a little bit better with options. With contracts, you kind of jump. If you're trying to get in and out of this thing, you're jumping in and out. You're going to get in trouble. That's why we've got to pay attention to your arrows. But the arrows, this is the VWAP. No, that's not the VWAP. What the heck is that? What's giving us those arrows? Oh, is it the AD? Yeah, turn that off. So that was the AD. Those are my settings on the AD. And then CMF, I'll go in and show you the CMF. This is the CMF. And again, I just use the TNT defaults. So, but I turn on the thresholds and I don't turn on the arrows. So I'll turn the arrows off. So that's just kind of, those are my settings for the chalk and money flow. That's how I use it. All right. Come on, buddy. Don't go rallying up now. So this failed. This triangle wedge pattern did fail. It just didn't fail spectacularly like we want it to do. It's holding that. It's holding that price level right there. 45.70. It's holding 45.70. It wants to go up, and that's not good for our position. It's going to try again. So here's the buy signal right here. Guys are going to buy on a break above that previous high. It's got to hold above that high. And then if it does, we're going to be in trouble. We're going to have to roll. We don't want to roll. It costs money to roll. Okay, there's our trying to break above that previous high. It's still inside of this previous high. It's not the high of the day, right up in here. So that's where the scalpers will try and step in. So they broke above there, push it up. Scalpers will start scalping right there as it touches that previous high. The bulls will try and step in and push it up and hold it above there. They want to go long. They think this market's great for a long position. They want to hold it above that high right there. And if they can, if it'll close above that high, the market will probably continue higher. It's been trying to go higher because of this big flat bottom right here. This is a bullish move, but we need it to fail for us. We want it to fail. We want the scalpers to step in and then flush back down. Three green bars. That's what we look for, right? 4 green bars, and then we look for a little flag formation and pull back, and then a rally. So let's pull this off just to clean this up a little bit. So we took off our limit order to get us out. We're down. We got a $200 drawdown right now against our position. Come on. Flush down. Fail on us. Okay, is it going to hold above that high? Look, it broke the high. It broke it, but it closed right on it. That text is in the way. Let's move that. It's going to try again. It's going to try and go up there and break that one more time. So this is a decision point. If it can close above it and hold above it, it'll probably continue to rally. Right now, it's got a lower high. It's the 4th bar, higher lows. There it goes. It's going to go. It's going to hold above it. There's the pop. Oh, that's not good for us. Again, I thought we were going to get it to at least come down to the VWAP, and it's not going to do it. It's holding above the VWAP. So this is very bullish still. Look at us lose money here. We're down $300 again. Land's pulling another losing day. Should we roll? There it goes. I thought we'd get some scalpers in there to push it back down. It didn't do it. Roll the multi-leg. Roll up the bull call spread. Let's roll it up a little bit further. One more. Up, up. Oh, that's not right. Screwed that up. Roll the multi-leg. So we're going to roll it up. Okay, so we just rolled it up. Rolled it up and doubled down. Now we need it to fall. Fail spectacularly for us now, S&P. I'll watch it go to the moon. So what are we down? 497. Liquidate our options. Liquidate our multi-leg. And see if we can get back $200. That would be $200 would be 20%. 240. But we're down 150 right now. Okay, it's flagging. And if this was a nice bullish market, we'd be looking to take another long position out of here with contracts as it breaks and makes the first candle to break a new high. First green candle break a new high would be a buy signal. Let's hope it fails. Okay, it's trying to be a buy signal right there. Now, if we wanted to, if we were worried and aggressive, we could put on a long contract here and put on a little bit of a hedge. I did have a lesson planned for us today. We were going to go over and look at I was going to get green. I was just going to get green, do a quick get green, and then go over and do our lesson. Talk about what we show you the lab for last night's class. Then we got caught again. Okay, first green candle to make a new high. Fail. Okay. Well, lesson learned today. What did we learn today? Today we got bullish news, and land kept trying to go short on bullish news. We need it to fail. And it's not going to fail. That's a buy signal right there. That's our little buy signal for the upside. Right there, the first candle to break a new high. Now it's got to break across that previous high and hold above it to go long. But we don't want it to do that. There it goes. What's interesting is we're making money right now. We're up $100 and that thing's going against us. I got this reversed. I want to just take it off. It's the wrong. It's not doing what I want. It's not going to let me out. Come on, let me out. I just took that off. It wasn't going. It wasn't doing what I wanted. All right. Well, land does it again. Look at this. I can't catch a break this month. I'm having an entire red month. One winner, $22, and that was just a recovery. Man, that's embarrassing. That's embarrassing, guys. That's terrible. November, October, September, December. No Christmas presents under the tree for the kids today. Okay, I got a Sunday school lesson for you. Don't know if it's going to mean much today. If the market does not decisively move in your favor, get out. If you're wrong, admit it. Break out or bail out. If you get stopped out, it's probably not a trade you wanted to be in anyway. So once you've moved stops to break even, relax, scale some positions out, build your reserve, then let the system and mathematics work their magic. Take profits along the way, pay yourself a job well done. If you can make that happen. I haven't been able to make that happen for me today. This week's been getting my butt kicked. The only saving grace is that I've been doing pretty well in the afternoons, but that doesn't do any good for us here in this class. I guess I'm a good example of what not to do this week. The only thing you can do for me now is give me a like, share, and subscribe, and If you haven't subscribed, subscribe. We'll try and make this turn around. We got to turn around. We got turnaround Friday. We'll turn it around on Friday. All right. Land Turner. There it's turning on us. Getting another pullback. Drive 1, drive 2. It's going to be a reversal or a drive. All right, guys. We'll catch you tomorrow.